Hey folks, what's going on today? Hope you guys are well. So in this video, I want to talk about a couple of things I've been studying lately, and I also want your opinion on it. So let's get into it right away. Let's talk about market sentiment. Market sentiment refers to the overall attitude of investors towards a particular security or financial market. It's the feeling or tone of the market, or it's crowd psychology as revealed through the activity and price movements of the securities traded in that market. All right. Very important, guys. It's something I've been looking into a little bit more, and I honestly think that over time, if you don't study into sentiment, what's going to happen is you're going to start developing your own sort of view on the markets that are not in line with the actual market sentiment, and that's going to hinder your ability to trade objectively because you're creating your own story. All right, so you need to understand the bigger picture, well, how investors feel about the market we're trading. Now leave it in the comments below if you think this is relevant or not. So let's get into it right here. Let's talk about market sentiment. So I've discovered a couple of websites, a couple of indicators that basically they conduct surveys about investor sentiment. All right, one of them is AAII. So this website right here, basically it's the American Association of Individual Investors, and they've been conducting a survey since I believe the 1980s. And basically what they do is they ask investors, are you bullish on the market, are you bearish on the market, or are you neutral? And this survey comes out I think every week. So this was last week's results. As you can see, the majority of people are still bearish on the market. So here, bearish sentiment stayed above 40% for the 22nd time out of the past 24 weeks. So investors are bearish on the market. But what did the market do, guys? If I need to remind you, what did the market do while everyone's looking bearish? So, these are things that we need to kind of understand here. So again, this website right here is another sort of chart I found, and I can link it in the description below. And basically it takes the investor sentiment data all the way from 1987, and it's plotting it on this chart to show you how bullish or how bearish investors in this association were. I guess in order to understand this on a deeper level, we need to understand who these investors are. And I do not think they are institutional investors, as it says here, individual investors. So looking at this chart, there's a bit of insight to be gained from it. But one thing I want to note is that if you look at the most recent activity here, you're going to see that the bearish reading is in fact above 50, or was in fact above 50, and now it is slowly under 50, but still above 40. And generally, yes. So what I would encourage you to do is pull up this chart and pull up a chart of the S&P 500 index. And I want you to look at the key crucial moments where this was reading either bullish or bearish above 50. And I want you to see if there was any crucial activity at those moments and if there were any long-term highs or lows being set in the market, all right? So this is something that I did a little bit of yesterday, and I was actually quite surprised to see that there were some phenomenons in this. When everybody's looking bearish, some interesting things happen. When everybody's looking bullish, some interesting things happen, all right? So I'm going to put the link to this in the description below. I want you to tell me what you think, all right? So leave that in the comments below. All right, another website I have discovered is this one. Now, this is nothing new. So there's a broker called IG, and what they do is they actually disclose their clients' positioning onto this thing right here called the sentiment report. I'll leave this one in the link below, but you can find this one pretty easily. That's all it is basically. So you can see here that the majority of people are bullish on cryptocurrency and gold. And then if you go all the way down to the US 500, which would be the S&P 500, you can see that the majority are in fact bearish. So let me go down a little bit and you'll see here. You're going to see that 81% of accounts with this broker are actually short on the S&P 500 right now. And I believe that this hasn't changed. So if I click on this, if you look at this, so since the March pandemic, you can see here that as we were going lower, clients were trying to get long on the market. But then as we started to trade higher, then everybody's trying to short the market again. And guess what? Majority are in fact net short on the S&P 500 and have been for a long time. And in fact, not surprising, it's not surprising that people have been net short the S&P 500 as it's been moving higher. All right. So again, that's IG for you, and you can take a look at that. It's pretty interesting. So it says here, retail trader data shows that 19% of traders are net long, with the ratio of traders short to long from 4.26 to 1. It's something that is notable. And again, this brokerage account, I just did a basic research on them. They have about 180,000 clients in the US. So that means that they have a pretty good client base. On average, let's just assume that each one has one account. So that's 180,000 accounts that are bearish on the S&P 500. And if each of them have whatever, 5 grand, you know, that's money that's being put into buying puts or just shorting in general. And if that kind of data is being shown on just one broker, I would be curious to know what all the other brokerages are showing as well. But again, at the end of the day, you can't really use this information to trade off of, but what you could use it, you could kind of combine some of this data together to give yourself a slightly better picture about how the retail actually thinks about this market. All right, so moving on. This website, Quandl, you can actually search for other data. I noticed that if you search for consumer sentiment, you can look at the University of Michigan's consumer survey and see different reports that are disclosed publicly. I guess any kind of public data that is available for you to view. And you can view it in those kinds of charts. So for example, you find this, you click on it, and then you can kind of see the graph laid out like that. So there's a few interesting ones here, and you can kind of scroll through them to find the one you think is most relevant. But there's all a bunch of these surveys in relationship to different aspects of the consumer sentiment. One of them being business conditions expected during the next 5 years or during the next year. So you click on this, and you're going to see that since the pandemic thing, we've had a decrease in the confidence that businesses will continue to be profitable going forward, which makes a lot of sense. And comparing it to past data, of course, and seeing how it lines up with different economic events that occurred. So I'm going to leave that in the description below and you guys check it out. All right. So the next website that I think is quite useful for looking at the holdings of the indices. So just real quick, I want to say one thing. So some people might say, okay, you can measure sentiment by looking at how many stocks are trading at 52-week highs versus how many stocks are trading at 52-week lows, or advancing declining issues. This is something that people might look at for sentiment, but I'll tell you why it doesn't really work, because what it does is it plots the difference between the number of advancing stocks and declining stocks on a daily basis. And the reason why this simply doesn't work as an indicator of market sentiment, I'll tell you why, is because the NASDAQ is weighted more than 60% in its top 10 holdings. All right. So if you're showing me an advanced decline, it doesn't matter if the other 95 companies of the NASDAQ are all going down. If Apple, Amazon, Microsoft, Facebook, and Tesla and Google are all going up, the NASDAQ is going to stay up. All right. So that's why advancing, declining actually is not even relevant to reality in this current market condition, simply because our indices are heavily weighted in their top 10 holdings. Right. This is slickcharts.com. I'll leave the link to this in the description. But basically, it shows the updated holdings of each of the important indices. And I believe it's updated daily, because here you can see that it was last updated on Friday, August 21st. And you can see here Apple going up to a weight of 14.5% of the NASDAQ. So 15% of the NASDAQ is in this one friggin' company right here. If you go to indexes and then go to analysis, so let's look at NASDAQ 100 analysis, it's going to tell you, so percent of total NASDAQ weight versus the number of companies. So as I go up this list here, you're going to see that 59.5% of the NASDAQ is in its top 10 companies. Meaning that if the other 90 companies are going down the drain, these top 10 are going to keep the NASDAQ strong. As long as these 10 companies are staying healthy, the NASDAQ will not be going down anytime soon. If the other 90 companies are, for example, going out of business, the NASDAQ will be affected, but not nearly as badly as if the top 10 companies would be selling off aggressively. All right, that's sort of the kind of market we're in right now. So looking at the S&P 500, you'll see a relatively similar story. The top 10 companies take up about 30% of the S&P 500. That's a little bit better, but it's still nothing to cry about, because these top 10 companies of the S&P 500 are pretty much the make it or break it. And again, it's the same companies as the NASDAQ pretty much, with a couple of added financials in there and healthcare and consumer cyclicals. But I would say that the S&P 500 is more diversified in terms of the sector diversification there. All right, guys, so this is a good website just to show you those indices holdings, and it is updated daily. All right, the last thing you can look at for investor sentiment is StockTwits, although I wouldn't recommend it much because it's kind of skewed, right? So what you do is you go to StockTwits, you type in the ticker you want, in this case SPY, and you can click here to sentiment, and it's going to give you a general graph based on the amount of posts that people are bullish or bearish. So in this case, 62% of people were bullish. But again, anybody can post on StockTwits and just post bullish for no reason. So that's why this is not really data you should be using to trade off of. Now, I have a friend who is good at reading this kind of stuff, and he can kind of read between the lines. If you like studying penny stocks and sentiment, StockTwits might not be a bad thing to look at just to gauge how bullish or bearish some people are. So, you'd actually have to sit there and read what these people are posting. Just looking at the sentiment indicator is not going to give you a good reading, because people will post bullish, but they might actually be bearish. Some people will post bearish, but they might actually be bullish, right? I think that's going to conclude this video for today, guys. So I gave you a couple of sources that you can measure market sentiment. And guys, if you have any recommendations or any other sources that you know of that you use to help you measure market sentiment, guys, leave it in the comments below and we can discuss this. So let's talk about it in the comment section below. And I will see you guys in the next video. Take care. Bye.